and welcome to another edition of Capital Market live on Channels Television. I am Will Ebong. Let's take a look at how your local investments fared this week. Did you make money? But first, let's have a sneak peek outside Nigeria. We start with Europe, where stock markets were volatile and closed well off their session lows after President Donald Trump said there was only a 50-50 chance of trade deal with the EU ahead of his self-imposed deadline of August the 1st. The UK's FTSE 100 was down 0.2% and Germany's DAX was off 0.3%. Meanwhile, France's CAC 40 rose 0.2%. Let's look at Asia markets now, how they fare. After that, we see investors weighed recent trade developments. Japan's stock slid at 0.86% to close at 2,951 after notching a record high in the previous session. The country's benchmark Nikkei 225, we've seen that losing 0.88% to end the trading day at 41,456 points. Mainland China's Shanghai, we see it sliding to close for the week. South Korea's Kospi bucked the wider trend by adding 0.18% to close at 3,196. Now let's see how the U.S. markets fared. Did the S&P 500 rise? It did rise on Friday as it closed out a winning week following solid earnings results and the latest trade developments. The broad market index jumped 0.4% and posted its 14th record close of the year at 6,388 points. The Nasdaq Composite rose 0.24%, ending at 21,108. For its 15th record close in 2025. Now, Dow Jones Industrial Average also climbed 0.47% to settle at 44,901 points. The 30 stock index ended the session about 0.25% off its December the 4th record close of 45,014 points. Now, all three major averages finished the week with gains. And let's see, it was a bullish week at the NESD back home in Nigeria. Over-the-counter securities exchange, we see the market posting strong gains across key indicators. The NESD securities index climbed by 4.16% to close at 3,633 points, while the market capitalization rose to 2.13 trillion naira. Now, in terms of activity, the market recorded a significant surge in volume, trading over 1.4 billion units. A jump of more than 1,000% week-on-week. Trade value, we see it also advancing by 28.8% to 559.64 million naira across 224 deals. Now, top advances for the week were NESD PLC, which gained 33%, Central Securities Clearing System, and AG Mortgage Bank, which added 21.1%, finishing at 1 naira 9 kobo. On the flip side, Petroleum dipped by 0.83% to lead the laggards. Top traded securities for the week include Industrial and General Insurance PLC, Central Securities Clearing System, and Okitipupa Oil Palm PLC. Now, it was another strong week for Nigerian equities as the market closed in the green. We're talking about the NGX now. The all-share index climbed 2.18% to close at 134,452, while the market capitalization rose to 85.06 trillion naira. Historic gains for the NGX. However, activity slowed with total volume down to 3.69 billion shares. Value, we see it falling to 112.26 billion naira, and deals dropped to 138,250. Now, sector performance was largely positive. All key sectors we tracked closed in the green. Top gainers this week, we see the Initiates PLC, which surged 60.82% to 16 naira 13 kobo. Now, on the flip side, we see the top losers, Secure Electronic Technology, that was down 24%, Omatech Ventures off by 23.93%, and Mayor Paints, which shed 21.43%. Meanwhile, the most traded stocks by volume were Access Holdings, UBA, and Japol Gold. Still in the news, what happened this week? Let's check in on the markets. We see the Securities and Exchange Commission, SEC, has clarified that it granted a no objection to the recent First Holdco transaction after thorough review and compliance with regulations. Now, the Commission stated that no further information was requested by the Central Bank of Nigeria, that's the CBN, after the transaction's completion. It also explained that its communication with parties involved was not a query, but part of an automated compliance process to enhance transparency in major market transactions. And still on the SEC, this SEC Director General Dr. Emomotimi Agama has praised the strong performance of Nigeria's equities market and called for the integration of the quantum computing into the financial system. Now, speaking of the commercial partners, half-year 2022 outlook in Lagos, he said innovation is key to sustaining market momentum. Dr. Agama notes that quantum tech could boost trading speed, enhance surveillance, and improve transparency across the market. Let's take a listen.
Quantum innovation, the next frontier, as it is called, means encompassing quantum computing, cryptography, and communication, promises to revolutionize industries from finance to healthcare. For capital markets, though, quantum computing could redefine risk modeling, asset pricing, and fraud detection, offering unparalleled speed and accuracy. This is the time for artificial intelligence. And in artificial intelligence, we're speaking to predictive or generative artificial intelligence. In Nigeria, we must ask, how do we position ourselves to harness these advancements? Just last week, we had the Genius Act. And I'm sure some of us haven't even heard about it.
That was the SEC Director General, Dr. Emomotimi Agama, speaking there about the performance of the equities market. We have all seen how the equities market has been soaring of late. A lot of events happening in the market, but we have joining us to discuss this Professor Uche Waleke is the Director, Institute of Capital Market Studies, Nasarawa State University, and President, Capital Market Academics of Nigeria. Good to have you join us this evening, Professor. Prof, if you can hear me, the NGX has had a stellar performance for the past few weeks. It's hard to keep up with what's happening here now. 134,000 to end the week. How close are we now to 150,000? And what is really fueling this drive with investors?
Yeah, thanks. Well, it's very interesting to note that the market is talking about the NGX, which is, of course, the main boss. Activities there have actually outperformed, I can say global markets, whether you are talking about emerging markets or even developed markets. If you look at the Morgan Stanley Capital Index, if that is your yardstick, whether for emerging economies or for developed markets, the Nigerian boss has outperformed. As we speak, year-to-date return is about 30%. In Nigeria, whereas for the Morgan Stanley Capital Index for emerging markets is still in the negative, minus 8%. So that tells you that our market, market has actually done well, relative to global performance, and it's not difficult to see why. Particularly what we saw in recent time, the fact that we've had investors' optimism, on the back of, strong, corporate earnings. We've seen the likes of Airtel, BUA, Guinness, declare impressive, results. And I'm sure you also saw that of Okomu Oil, declaring dividend of interim dividend of, 30 naira. And Seplat too has announced that by July, 30th, that's on Wednesday next week, it will also be announcing, its results. And the expectation, of course, is that it is going to be impressive. Of course, Seplat is not only listed here, it's also listed on the London, London Exchange. So the combination of factors, really, apart from corporate earnings, you can also attribute that to favorable macro economic conditions. The fact that inflation in Nigeria, has started cooling. The fact that, again, interest rates, yes, have not been rising. As a matter of fact, the relatively low yield now, so to speak, has also enabled this bullish trend we have in the equities market. Because anytime you have interest rates, not climbing, traders, investors tend to rebalance their portfolios in favor of equities. So corporate earnings, yes. Expectations, investors' expectations regarding company's performance. That's talking about the fundamentals. Yes. Macroeconomic conditions, yes. And the last point I mentioned about yields, in the fixed income market, which are beginning to come down.
We did see that there was a general market rally. All sectors were in the green. They all surged. Even companies that we didn't even think of, saw that rally as well. But speaking about all sectors that, saw this rally, the industrial goods sector also rallied. But news coming from there, we see Dangote Cement. We've seen that performance from Dangote Cement, also from Boa Cement. But Aliko Dangote has just announced that he's stepping down as the chairman of Dangote Cement. How are market watchers taking this news?
Yeah, yes, industrial sector, was actually up, during the week. But of course, if you look at it, since the year began, it has actually been below the average. I just told you the average has been, 30%. Talking about sectors that outperform this average, talking about banking, for example, at 44%. You also have consumer goods at over 60%. Okay, so these sectors have actually outperformed the index, which is the general average. But specifically, Boa Cement, has also, done well. The same thing can also be said for Dangote Cement, cement. The company just mentioned. I think the last trading at 493 naira. That's closer to its 52-week high, relative to the 52-week low of about 390 naira. And that's again on the back of strong performance by Dangote Cement. I was looking at Dangote Cement's performance, the half-year results, January to June 2025. I noticed that earnings per share alone, jumped from 11 naira, the previous period, that's January to June 2024, to I think over 30 naira now. That's talking about earnings per share. So that kind of fundamental, is something that should also excite investors. So now coming back to the point you mentioned, or the question you asked about the retirement of Dangote, Aliko Dangote. Of course, for me, that's he's simply pulling out to allow for continuity in governance. He has said he's leaving to focus more on the refinery, business interests, refinery, fertilizer, and the rest of them. And what's also of interest to me is that he's also bringing on board somebody that's very capable of continuing the if you like the trajectory of performance of that company. That's in the person of trying to get his name now, but he used to be, if you recall, the administrator for the Nigerian exchange. That was in 2010. I think it's Asebo. He used to be the administrator of the exchange, and he's also somebody that since 2014 has been on the board of the company. So it's not as if they are bringing somebody that is new or strange. He has been an independent non-executive director in the company. So we expect that as far as governance is concerned, we want to see continuity. Of course, it's all about the board. The management is still intact. The CEO is still there. So we expect that Mr. Ezasebo, I hope I'm getting his name correct, will bring in his huge experience over the years. He has been the group chairman of Eco Transnational, bank. So he will bring in all of that to bear on the fortunes of the company going forward.
I'm sure investors are holding their breath to see what the new management will bring on board as Aliko Dangote takes a bow from the company. We'll take a moment, Prof, and our audience. The capital markets continues right after the break. Stay tuned. Welcome back. If you're just joining us, you're watching Capital Market live on Channels Television. I am Will Ibanga. We're discussing how markets performed this week. And one of the news we had was the rebasing of Nigeria's GDP. We see that after the rebasing, Nigeria's gross domestic product, that's the GDP, grew by 3.13% in the first quarter of 2025 from 2.27% in the first quarter of 2024. According to the National Bureau of Statistics, the NBS report shows that the country's GDP is now worth 372.82 trillion naira. That's around $243 billion using the 2019 base year. Now, the updated statistics reveal key sectors leading the economy. You see crop production up 17.6%, trade, real estate 10.8%, telecommunications 6.8%, and oil and gas is just up 5.9%. Now, real estate has notably leaped ahead of oil and gas, reflecting better capture of informal activities and urban development trends. We still have Professor Uche Waleke in our Abuja studio to talk about this and more. Prof, real estate has now leapfrogged oil and gas to become the third largest sector. What does this shift signal about Nigeria's economic diversification and opportunities for investment?
Yeah, let me provide maybe a general impression of the GDP numbers, to start with. I must tell you, Will, that I was actually expecting something bigger than the figure we had, nominal GDP of 372 trillion, for Nigeria. That's about $250 billion. And of course, we know that it has come that low because of the exchange rate. Especially when one takes into cognizance the fact that a lot more industries and products, the MPS said the 40 industries, and 212 or 200 years about that, over 200 products. So when you look at that, the pension funds have now been accommodated, modular refineries, and so on. And then a lot of the informal sector, captured. So one was actually expecting, a number that's slightly bigger than, what we have. But again, you also know the implications of that. If you look at the stock market, for example, it also means that the contribution of the stock market, talking about the size now to GDP, has, dropped. Equities cap is about 80 trillion naira, and if you put that in dollar terms, that's about $56 billion. So what that means is that we are now looking at equities cap to GDP at around 20%. It used to be up to 30%, before the rebasing, was done. So one thing strikes me, yes, you mentioned the issue of, real estate. What has also emerged is a real shift in the entire structure. Services sector used to be 51%, now 53%. The industry sector has dropped, with this rebasing from 27% contribution to GDP to now about around, 21%. Although we also saw some shift, some increase in the agri sector contribution, from 22 to, 26. So in terms of the sectors, yes, you've rightly mentioned it. Real estate is now number 3. Coming after, crop production and trade, trade contributing 17%. So the oil sector has now been displaced to number 5. So that also is a signal that the economy is gradually shifting away, from oil. And I think for me that's a good development. Okay. But it's also important we begin to defocus, if you like, on the GDP numbers to also see how these numbers can translate to, the real benefits to the ordinary Nigerian. So it's not just about GDP growth. We had GDP grew by 3.13% in the first quarter of 2025. But if you disaggregate that growth, you also realize that it is powered more by sectors that are that, if you like, have, in terms of employment elasticity, not very large. So when you have growth being powered by the financial services sector, for example, by the telecom sector, for example, okay, these sectors don't employ as many people as agriculture, for example. Agriculture grew by less than 2% in that quarter. So we need to focus on activities, okay, that can, if you like, drive or turbocharge, sectors that have very high, employment elasticity, talking about agriculture and also talking about manufacturing. So that for me is also one way we can, begin to see even companies in these sectors also begin to do, begin to do well. And I'm happy that despite all odds, the agri sector in our markets today are doing well. Talking about Presco, talking about Okomo oil. Okay, these stocks are doing well, but we need to also promote these sectors in such a way that we can have more companies from this sector's list. And that is the only way we can say that our market is reflective of the economy. Otherwise, you see the market doing well, and yet the economy will not be doing well. So the linkage, okay, will not be that strong.
Okay, Prof, you've mentioned about, you talked about companies listing, more companies listing from these sectors that, we've seen the diversification now. How can the capital market policy, is there any policy that the capital market can come up with that can help translate to stronger growth and deepen equities and deepen growth in the economy's growth?
Yes, if access to credit is one. If you look at our country today, part of why you have a lot of the informal sector struggling is because a number of them too are not getting access to credit. I'm sure you also saw the I think recent survey, credit condition survey that was conducted, I think by the central bank recently, where it talked about loan defaults. High rate of loan defaults on the part of SMEs, which is why I've always advocated that when it comes to ensuring that SMEs get credit, it has to be targeted. It has to be interventions that must be done by banks that are specially set up for such purposes, not commercial banks, okay? Because there's a limit to which commercial banks can give out credit. Mind you, they are profit-oriented businesses. So if interest rate, for example, we know today monetary policy rate is at 27.5%. You have an asymmetric corridor of +5. So if you add that, you realize that if interest rate is very high. Okay, so small businesses don't have access to this credit. So we need, if you like, special vehicles that can help them get this credit. And that is why I'm happy that there's a current effort to recapitalize the Bank of Industry and the Bank of Agriculture to also restructure them, because these are the banks, development banks that should actually give out these credits to small business. So as small businesses grow, and I'm also happy with the recent tax reforms that are also geared towards exempting these small businesses with turnover of less than 50 million naira, just to enable them to grow. As they grow, they can be in a position to now access more funds via the capital market. That is when these businesses begin to think of coming to list. And I also think the government should lead the charge with respect to getting companies listed. Privatization efforts should be done through the exchange. Okay, so today Dangote refinery is talking about listing. That's a very good one. And we expect that the government, even when they eventually privatize the refineries, okay, the route should be through the capital market, so they don't end up being sold to just a few, a few hands. NNPC Limited. It's time NNPC, the new company under Kama is also brought to the exchange. I'm also happy that the new management of NNPC, Ojulari and the rest, are also thinking they already have a plan to ultimately get NNPC listed. So when we have all this, it's marks of confidence in your capital market, and you can also be sure that will also draw international investors more, more in Nigeria, more to Nigeria, more in our markets.
Okay, we've mentioned that the CBN, we've seen that CBN has held rates now for 3 consecutive meetings, and also for the banking sector, it did mention that 8 of the 26 banks that we have met the new capital requirements ahead of the March 2026 deadline. Seeing that we just have a third of the banks in Nigeria meeting this requirement, what do you see? What's the outlook for other banks that seem not to have caught up yet? In 1 minute, Prof.
Yes. Now, if you notice, I told you the banking sector year to date has done like 44% above the average. So that tells you the level of confidence that investors have in the banking sector. So recapitalization exercise by the central bank, it has also succeeded in injecting or boosting confidence in the banking sector. Yes, we hear 8 banks have already met the requirement, but just as you rightly mentioned, there are also other banks that are still struggling, to do that. And it's interesting to know that even one of those banks was able to raise money from the London Stock Exchange. Again, that tells you the level of confidence that international investors also have. Now, for the other banks that are still struggling, of course, there are other options. The option of downgrading the license is there. But of course, for these other banks, mergers and acquisitions, remain an option. This is a time for them to also begin to think of how to merge, to be able to meet the requirement before 31st of March, next year. So the options are clear. It's either raise money through fresh issues of shares, or you merge.
Thank you so much, Prof, for that insight.
Or you also seek a lower license.
Okay, definitely, Prof. We'll keep track of how this is impacting, especially small businesses who are struggling. But it's a conversation we can't even exhaust this evening. Thank you so much, Professor Uche Waleke, Director, Institute of Capital Market Studies, Nasarawa State University, KEFI, and President, Capital Market Academics of Nigeria. It was great having your perspective on the show. And that's a wrap of another edition of Capital Markets. Remember, whether the markets are bullish or bearish, knowledge is your best investment. Keep watching, keep learning, and keep growing your financial savvy. You can catch this again on our YouTube channel. I'm Will Ibong. Thanks for watching. See you next.